Today, though, however, we've got a challenge. We are sitting right at the 200-day moving average. We need to close today and tomorrow above the 200-day moving average. The market needs to get up above the 200-day moving average and close the week above the 200-day moving average. But here's what you need to know before the bell. This is going to be a little bit long one this morning, so just bear with me. I've got a few things to go through. First of all, just looking at the S&P 500, we've had 3 good days of a rally. So markets are not overbought yet. Futures are pointing higher this morning following the Fed's announcement yesterday. Earnings continue to be very well. So we're not overbought yet. We're very close to triggering that buy signal on the MACD, which would kind of confirm that we're moving into that seasonally strong period of the markets. Today, though, however, we've got a challenge. We are sitting right at the 200-day moving average. If we open up this morning, that's fine. We need to close today and tomorrow above the 200-day moving average. The market needs to get up above the 200-day moving average and close the week above the 200-day moving average. Now that's critical because that's going to stop that downward pressure short term on the markets, and that'll help alleviate that. That will also, if we can get up above the 200-day moving average, hold that today and tomorrow, close out that week there, that will also trigger the MACD buy signal and confirm that signal. So again, we've got a couple of very important days here in the markets today and tomorrow. Now tomorrow's the big employment report. The ADP report yesterday was weak, but ADP has not had a big correlation to the BLS employment report as of late. So again, if we have a super strong employment report tomorrow, that might throw in some fears of inflation that could put pressure on the market. So again, we've got a couple of days here ahead of us of some potential chop, so pay attention to that. I do want to jump to a couple of other assets real quick. Gold has had a big run here as of late, not surprisingly because of what happened between Hamas and Israel. So again, that's had a big run. It's about to flip back to a sell signal here. Ran up to about 2,000, which has been kind of a real kind of resistance line for gold prices right now. Yields are starting to fall on bonds. That's going to put a little bit of pressure on gold prices. So again, just kind of keep a watch on this. If you're long gold here, you might want to take a little bit of profit off the table. We recently added some gold to our all-weather portfolio. We'll probably take some profits there today because we are very close to that sell signal, which has actually been a pretty elevated sell signal. It's been a big run for gold here just recently. Outside of that, also talking about yields, yields fell sharply yesterday on the back of Jerome Powell's announcement. Pretty much, and again, we'll talk about this, but pretty much he's saying the Fed is done. We're done hiking rates at this point. Yields have been doing the job for us. Importantly, though, we broke below the 20-day moving average yesterday. That's really kind of been the running trend line of yields here for a bit. So again, if yields continue to fall here a bit, the next level of support is going to be about 4.5% on the 10-year Treasury. We are on a sell signal for rates. That's an inverse signal for bonds. That's a buy signal for bonds, sell signal for interest rates. And we're not oversold yet. So there is some room here for yields to fall a bit more. And so we'll see, kind of how the bond market reacts. But if we have a cooler employment report, following the ADP report yesterday, anything that suggests the economy is slowing down here, anything that suggests that inflation is pretty much under control at this point, that's going to cause a drop in yield. So just kind of keep a watch on that. But we do have a potential setup here for a bit of a fall in yields. That would certainly lift bond prices, which have been under a lot of pressure. So not surprising you're going to reflex. Bitcoin has had a very big jump here. Of course, also in line with the Israeli conflict. Had a big jump in Bitcoin prices, extremely overbought here. So if you're long Bitcoin or cryptocurrencies, might want to think about taking a little bit of money off the table here. Again, you'll probably get a decent pullback, have an opportunity to add back to it. But again, just real overbought on a short-term basis. It's been a very sharp rally just in a very short period. So again, just that's not sustainable long-term. So again, you might want to think about just kind of reducing your position a little bit. If you own cryptocurrency related assets, take a little bit of profit off the table here and look for a better opportunity to add that money back in. That's what you need to know before the bell this morning.